In this video, I'm going to reveal to you the biggest lie that is still being told in trading today. I'm going to talk to you about something I keep hearing over and over again, which is about the structure, the bias, or the trend of the market. I constantly hear pseudo-traders, pseudo-mentors, who don't even show you any payout, withdrawals from prop firms, which proves that they're really just core sellers and not profitable traders. Because if they had withdrawals and payouts from prop firms, they would show them to you. But the thing is, they never show them. But unfortunately, since there are so many individuals like this, they effectively fill the heads of those who genuinely and truly want to learn from profitable and successful traders with outright lies and complete nonsense. Many of these people talk extensively about market structure, about prevailing trends, about their directional bias. All these particular kinds of phrases are specifically meant to make you feel like a truly bad trader if you do not precisely know where the market is actually going. And in this video, I'm going to reveal to you, I'm going to show you that in reality, the market structure, the trend, the bias, it's practically impossible to know where the market is going. Why? Well, for a simple reason. On the 4-hour time frame, the price will be bullish. On the 1-hour time frame, it will be bearish. On the 15-minute chart, bullish. On the daily, bearish. On the monthly, bullish. So the trend is not clear and you will never make money if your trading strategy or plan is based solely on getting that market structure right. And I'm going to show you with various examples throughout this video how if you focus only on the structure, you will never be profitable. But well, this is nothing new. If this is being explained by a trader who isn't profitable, well, a trader in quotes, how are you going to be profitable yourself? If the person explaining it to you doesn't withdraw a single euro or dollar from funded accounts, from prop firms, or from trading, why would you listen to them? But anyway, since I know there's a lot of talk about this topic, about structure, trends, and all that kind of stuff, let's really explain it and let's see that this is a big scam and a huge lie. What's the first thing we're going to look at? Well, how the vast majority of pseudo-mentors and pseudo-traders explain structure. Well, like this, right? They say that when the market price is clearly respecting an established uptrend, when it's consistently making successively higher highs or significantly higher lows, then the overall price movement is undeniably in a very clear and strong uptrend area. And on the other hand, when the price is making lower highs and lower lows, then the price would be in a structure, in a trend, in a bearish bias. They draw it for you with 3 lines. 3 lines where it's as simple as drawing it here, right? It's as easy as doing this. And then your pseudo-mentor, your pseudo-trader tells you that he clearly sees an uptrend. We're going to go into detail about this later, and we'll see how just drawing 4 lines here isn't enough of an explanation for me. You have to show me, you have to explain it to me with real examples, with real trades, and with real Japanese candlesticks. Because this looks very nice, but when you actually get into real trading, it's never like this. You're going to see wicks, you're going to see false structure breakouts, you'll see very strong moves up and very strong moves down. You're going to see news candles which will break all this bias and all this structure because they'll break a lot of highs, a lot of lows, and you won't know if that news candle counts, if that news candle doesn't count, if now that you've broken that news candle to the upside it's bullish, or if it was just a liquidity grab. Since there are so many unknowns, what they do is draw this little picture for you here. They draw it for you with 4 lines, a few silly things just to take your money, telling you they're profitable when they never actually show you anything. They show you these 4 lines and say, no, you buy here and you sell here. And you, well, since they show you all that fanfare, you believe it, but in the real market, you'll see how in 4 hours it's going up, in 1 hour it's going down. On the daily chart, you're stuck in the middle of a range, and that's the reality. Not just 4 lines here and some graffiti drawn on the screen. But anyway, let's look at it now with real examples, because I am actually going to give you an explanation for it. And I'm going to make it clear to you that things like structure, bias, trend, and all that stuff, in most cases, are really good for nothing except to confuse and mislead you. Now let's get to the real examples with actual Japanese candlesticks, and you'll see that what they tell you about structure and bias most of the time is useless. Well, yes, for making you lose money and time. Here we are on the euro dollar. As you already know, I personally only trade the euro dollar, and that's basically because it's the currency pair with the most volatility, the highest volume, and the most banking transactions, which makes it the currency pair with the least manipulation. Obviously, within all the manipulation we experience nowadays in the markets, in governments, in the markets, and in the world. But within currency pairs, within Forex, it's the pair with the least manipulation. And there's a simple explanation for that. It has a lot of volume, so a single person, a single entity, a single bank, a single institution, or a single investment fund is not going to move the market. Instead, there will be several investment funds behind the movement. Keep in mind that the lower the transaction volume, the easier it is to manipulate. Because if I put in X millions, I could move an asset that nobody knows about. But the euro dollar, you're not going to move it because there's so much money behind it and it's very hard to manipulate. Obviously, among all the manipulations that exist, you already know that everything is absurdly manipulated. Alright, as we can see here, the little drawing our favorite guru, who never withdraws a cent from prop firms, showed us, as you can observe, there's nothing here that even resembles it. We're looking at the daily time frame, which is supposedly the time frame where things should be the clearest, because if I drop down to 15 minutes or to 1 hour, your head will explode since you'll see 300,000 structures, 300,000 barriers, and 300,000 stories they tell you just to sell you on their pitch. So what do we have here? Well, we have the daily time frame, and we see that the price, according to what our trusted guru would tell us, is in an uptrend. An uptrend where, in theory, the last low was this one, the last impulse. Alright, the last impulse comes from here. Now, a lot of pseudo traders who have never withdrawn from prop firms or anything will come at me and say, no, the real low comes from here. Alright, well, it comes from here then. Therefore, the price, until it breaks the last low here, in theory, nothing should happen. Okay? Here comes the first inconsistency. Why? Because many traders channel the structure for their trading plan. They'll tell you that the structure changes here because it's the last impulse. And some will tell you it's here, some will say it's here, some here, and some here. So what happens? We're already basing things on subjectivity. And when you lose a trade, your favorite mentor will say, no, the structure change was down here. You shouldn't have been looking for sells. You shouldn't have been looking for buys. Why do they do this? Well, because it's something very subjective. Because no one is going to tell you if the low is here, 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 or here. So what happens? That when you fail, they'll tell you it's your fault for not having marked the low correctly in that structure they've made up. So what happened here? Well, if you mark the structure change here, which I'm telling you would be fine because it's the last low that creates the impulse. What happens is that some structure enthusiasts will come and tell me no, that it's not there. Alright, fine. The structure change would be here, the last low that creates the impulse, okay? Here the price breaks with a full candle body. Second thing, many will tell you no, the structure change is with a full body. No, the structure change is with a wick. With a body or with a wick, on which time frame? Because on the daily chart, it has a body, but maybe on the weekly, it has a wick. Maybe on the daily, it has a wick. Maybe on the 4-hour chart, it has a body. So which do we go with? Body wick, 4 hours daily. Which one do I use to base a structure change on? Well, they won't be able to answer that either. In theory, on the daily chart, price has made a structure change. It has broken this low. Here, we would look for sells. So what happened? Because now, according to your favorite guru, this is already a sell trend. Now here, you go all in on sells, put in your house, pawn your car, pawn your watches, and go short. Because this is going straight to hell, and you're going to be a multi-millionaire because you've discovered the perfect strategy. Well, as always, structure. No. The price keeps going, here you would look for a sell, boom, 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 and it breaks again. It would have already taken you out if you're a swing trader or something similar, or, well, if you base your trades on structure, it would have already destroyed your daily structure because you thought it was going to be a sell and in the end the price didn't keep dropping but instead kept going up. But not only that, here we have another example. We see how the price creates a low here, as you can see, and it forms a low, boom, it breaks it, and you'd say, no, this is bullish, the last low is being respected. No, it breaks the low, boom. And not only that, but it goes back up again. Now we'd have another mistake, right? Here we have several mistakes where the price breaks upwards. Here, for example, it breaks the high and then drops again, all right? You'll see here continuously another example. It breaks this low, does it with a full candle, the last low of a strong move, and then goes back up. Again, many defenders of structure will tell me that, well, I'm applying it wrong. But, well, it's okay. Keep applying structure, but you probably won't get very far with it, all right? But anyway, let's move on. 4 hours, 4-hour time frame. Here we can see how, on the daily, in theory, we were bearish, right? We were bearish, we came from up here, boom, boom, boom. All right, let's go further. 4 hours, 4-hour time frame. What do we have here? Well, in theory, the price is in a bullish structure, right? On the 4-hour chart. Let's focus only on the 4-hour chart, okay? Let's go by time frames. The 4-hour chart shows a bullish structure and the price breaks through a full-bodied candle. At this point, we're already bearish. Benjamin looks for sells. All right, big surge, boom, and it takes you up. Whoa, it did it with a wick. So am I bullish, bearish, or should I do a somersault? Well, I'm bullish. I'm going to look for buys here at the 50% Fibonacci level because my favorite mentor told me so too, since I'm in a bullish structure with Fibonacci. You get burned again, and your favorite mentor tells you once more that you're applying the strategy wrong. Hey, you're applying it wrong. No, not applying it wrong, buddy. You have no idea. It collects liquidity again. Hey, so now am I bearish or bullish? You don't even know what time frame you're looking at anymore. It sweeps the low, then goes back up again. In theory, we should be looking for sells, right? Because those are wicks. They won't be able to tell you that either. A new low, it creates another impulse, breaks it with a full-bodied candle. In theory, we'd be looking for sells. Nope, back up again. And it would sweep the daily high, which is this one here, the one I mentioned to you. It sweeps it. Boom. Now, in theory, price is bullish again because it broke the daily with a full-bodied candle. All right, it broke with a full-bodied candle. So here you can see the rejection that price just made to the upside. If you're looking for buys, you're probably getting caught in them. Why? Because what price did was collect the liquidity up here and start that drop. Why? Instead of looking for buys at I don't know what point. Because as you can see, this daily low has already been taken out by price. A low, even if it's a bullish candle, this is a low. As you can see, price creates a low here, this candle, boom, and then moves up. This low has already been cleared by price, and it's created a rejection. It's the last low on the 4-hour chart before the move up. So where are we now? Are we in a downtrend, an uptrend, or a liquidity grab? Because, well, lately, the structure hasn't really helped me much. Here, it broke down, I looked for sells, and I got burned. Here, I looked for sells and I got burned. Here, I looked for buys and I got burned. In all the examples I've been showing you, the price hasn't been respecting that structure. Look at the mess we'd have with the structure here, right? A lot of people will tell you, no, sell, don't buy. Where do I enter the sells? Where do I enter the buys? In theory, here, when the price breaks up here, I should be looking for buys, but I get burned. Here, when the price breaks upwards, I should be looking for buys again, and I get burned again. Here, when the price breaks down, I should be looking for sells, and I get burned. Here, in this example, same thing. It breaks with a full candle, I look for sells, and I get burned. Same here, it breaks structure 4 hours, and I get burned. Here, the price breaks upwards, I should be looking for buys on the daily, on the 4 hour. And I get burned again. Here, the price breaks this low and then recovers. Here, the price breaks this high on H4, so I should be looking for buys. And look at the pullback it's having now. I don't know if it's gonna go down or up, because right now it's a bit, at the moment I'm recording this video, things are a bit unsettled because the US government is shutting down and it's a bit more volatile. There probably aren't any high impact news events like FPCP, and the market is a bit crazy. But anyway, here you can see how the structure daily and 4 hour, but if I go down to 1 hour, that's when everything collapses, okay? Look at the structure we have here, okay? We can see here how the price breaks the high. I would be looking for buys, right? Here, if you set your stop loss, you would have already gotten stopped out, no question. Let's go further. On the 1 hour chart, let's see. Look at the samba dance we've got going on here. I call it the samba dance, the money dance. It breaks above, it breaks below. Here you sell because you think it's going to keep dropping, but no, it goes up. Here you buy because you think it's going to keep rising, but no, it goes down. Look at the dance the price is putting on for you there. Same thing here. No, it broke this last low. These are sells and then a big wick to the upside. Once again stopped out, once again liquidated by the damn structure. Further ahead, look, let's see how you would see it, okay? Look here, for example. Another example we have here. Here we see how the price, you're on the 1 hour chart, right? This high creates a low, boom, you look for sells, right? I mean, your favorite mentor, your favorite guru who never shows you payouts or teaches you anything. This is a joke, okay? Because a lot of you later tell me in the comments, no, it's just that you have a big ego. Lighten up a little, folks, please. Bring a little joy, because trading is really boring and you have to spice it up a bit. I'm looking for a low here. We're looking for sells to the upside. Once again liquidated and another challenge lost. Now yes, now I'm looking for buys. Since I've closed with a bullish candle, I'm going to look for buys now, okay? I hope the examples are making sense. I'm not going to draw everything because otherwise I'm looking for buys. No, I get caught again. Now it sells, now buy, now sell. Now I don't even know if I should do a somersault or just go to sleep. Now it's buys here because it closed up with a body. I get liquidated. Now it goes back up. I look for a sell. Now I have to look for a buy. I don't even know anymore if I should look for a sell or a buy, or if I should do a back bend. Same here, it breaks the low. Notice how it's just a joke. This whole structure thing is a total joke, honestly. I don't know who relies on structure, because honestly, look, this low is the one that breaks the high, right? Many people, even when the price breaks upwards with time frames and all that, well, a lot of them drop down to 15 minutes, 30 minutes to look for an entry. Hey, it broke to the upside. Well, these would be the ones sought by those who look for upward structure with a wick, and some of you will say, no, it's always with the body. Well, that's what you say, because there are also plenty of people who take wick breakouts into account as well. So believe me, a lot of people do consider structure with a wick, not just with the body. Here you would look for sales, or of course sales, because, well, when it breaks upwards you would look for buys, and now since it broke downwards you would look for sales. And now, well, you get stuck with it, right? Look at M15. In M15 now, well, we're looking at H1, H4 and daily time frames. If we go to M15, this is a festival of losing money. Just imagine, you're in a bearish structure. Your favorite mentor has told you to draw the Fibonacci here in the golden zone. And you say, damn, I'm going to bet my house here. I'm going to pawn my Lamborghini here. All in, my friend. Stop loss again, okay? I'm telling you, we're analyzing H1, H4 and daily cases. Look at the wonderful structure we have here, folks. Look, this is the same as this, okay? This is what our guru taught us, this is what we bought on AliExpress, and this is what actually arrives at our house. Let's see what kind of structure we have here, folks. This right here, when the price breaks with this, what am I supposed to do? Should I be looking to sell, buy, or just go out and get some bread? Because I really don't know what I should be doing here. Or here, the same question. What's the high point of this downward move? Is it this one up here, or is it this one, which is the last pause before the drop? Well, your favorite guru won't be able to tell you either, because they have no idea. So, they really have no idea. Same thing here. The price goes up in 15 minutes, boom, it drops, and then it goes back up again. The samba dance, once again. Let's look at more samba dances. Same thing here, take a look. You think this is the last low? Hey, I'm going to draw my Fibonacci here. Look, let's see what a structured trader would do. Let's set it to M15, okay? M15 is bullish, M5 is also bullish. I'm going to draw my golden zone. This is my bullish structure. This is my high that was broken. This is my impulse low. And I'm going to place my entry in the golden zone at the 0.6, 0.7. Why? I don't know, because my favorite mentor told me to, and I'm going to listen to him because he has a Lambo and I don't. I place my little buy here, leave my limit order. Oh man, I got stopped out again. Well, folks, this is structure. I'm doing this here in a bit of a joking tone, just having a laugh, you know? So we don't take it so seriously. Guys, really, structure, and I'm telling you, look, another structure. Here we see how the price breaks upwards with a wick, here with a wick, okay? Look, wick and wick. What are you looking for there? Okay, same here, look, the price breaks the low. In theory, on the 1 hour or 4 hour chart, the price is bearish because it has broken the downtrend again, right? The uptrend is whatever they tell you it is. And here you can see how the price, when it breaks a high, goes down. When it breaks a low, in this case, it goes up. Here, many will say, no, here it broke below with a body on the H1. So I'm going to draw my Fibo from the highest high that the bias created. And in my golden zone, I'm going to place an entry, okay? Well, you're going to end up, my friend, waiting almost 4 days for your entry, which will probably hit your stop loss. Because look at how much the price has recovered. Almost 90-something%, okay? And in the end, the price, well, it's still around here. And eventually it broke the high, okay? Because this is the backtest we're doing. Notice that it ended up breaking that high. And many people here would be looking for sales because it broke the last low and is heading down, right? And now I'm going to tell you something to open your mind a bit, you know? So you can think it over, so you can really consider whether this whole structure thing is valid or not. Alright, now, jokes aside, no more messing around, no more laughs. Some of you take it the wrong way and say, no, you're too rude. Come on, a little bit of humor, okay? Let's have a bit of fun with this and make it a little more enjoyable. Let's see. Structure, yes or no? Real opinion. Neither yes nor no. You can take it into account on the daily or weekly chart, but not much more than that. If you start looking at structure on the M15, H1, H4, H2, M5, nowadays I see a lot of so-called gurus using those time frames like H2, H3, M45. Let's see. If you go to M5, if you go to M15, if you go to M2, if you go to H3, of course you're going to find a structure change. Of course you're going to find a liquidation. Why? Because you keep running around in circles. I mean, if you want to see that the price is going down, you have hundreds of thousands of time frames to confirm it's going down. That is, if I now switch to H1, H2, half an hour, 25 minutes, 22 minutes, I mean, I can set it to whatever time frame I want. Look, 22 minutes. Here I am already on the 22-minute time frame. I can switch to the 24-minute time frame. I can switch to the 25-minute time frame. That is, if I want to look for a structure, a buy setup either bullish or bearish, because I want to sell or buy, you will find it. In other words, you will find that the price is either bullish or bearish. You will find whatever you want in the market. Why? Because you can use whatever timeframes you want. So, why don't I think that structure, the buy, and the trend are very important or very relevant? Because ultimately, price does whatever it wants. Price moves according to sessions, liquidations, liquidity, money, and major news events happening that day, like the NFP, CPI, or FOMC. There will be moments in the day, days, weeks, or even months when price will take a single direction and it won't care about your structure. There will be situations where the price stays stuck in a tight range and you can't tell if it's bullish or bearish, and what you'll end up with is a lot of stop losses. In other words, the structure, in my opinion, with the years I've been here, it's been almost 8 years now, and again, with over $300,000 in payouts from prop firms, I'm going to show you a lot of screenshots here, because this is the reality. My experience throughout all this time and all these withdrawals, with my trading strategy and countless hours in front of the charts, is that structure actually confuses you more than anything else. Personally, these days I don't even use structure. I honestly don't care whether the price is going up or down. If the price takes out a low on the 4-hour, 1-hour, or daily time frame, I look for buys. If the price takes out a high on the 4-hour, 1-hour, daily, or weekly time frame, I look for sells. And these are the examples I've been showing you here. In fact, you can see that the price, look, here we have the price, okay? It breaks a high and it goes for sells. It breaks a low and it goes for buys. It breaks a low, retracement for buys. It breaks a high, retracement for sells. It breaks a low, retracement for buys. It breaks a low, retracement for buys. It breaks a low, retracement for buys. You might say, well, this retracement is very small. Let's see. A retracement that's very small, okay? Just so you see, this retracement on the 4-hour chart is, let's see if I can show it, it's 50 pips. Considering that my entries usually range between 4 to 8 pips, that's more than enough for 4 or 5 trades, okay? And this is the structure that I use. This retracement that gives you about 50 pips is more than enough to make money, considering that my stop losses are usually around 5, 7, or 8 pips, so it easily gives me a 5 RR, and I don't even go for a 5 RR. Normally I go for a 2 or a 3, so it's more than enough for me to make money with that retracement. Now, to wrap up the video, I just want to simplify the market structure. Personally, I don't use it or pay much attention to it. I only pay attention when the price manipulates a high or manipulates a low during the London session or the New York session. And with this very simple strategy, just waiting for liquidations at highs and lows, at peaks or troughs, and waiting for a pullback, which statistically tends to happen when the price breaks a high or a low, the price usually pulls back, and that's where I look for my entry. Something so objective, not subjective like structure. Structure is very subjective, and that's the main flaw. You need an objective trading strategy. Hey, if it breaks a high, I sell. Hey, if it breaks a low, I buy. That's my trading strategy. Buy when it breaks a low, sell when it breaks a high. And with that trading strategy, just trading 2 hours during the London session and 2.5 hours during the New York session, I've withdrawn over $300,000 in payouts from prop firms. And I'm not like your favorite guru who shows you lots of hams, lots of wines, and lots of little cars, but never shows you any payouts or prop firm withdrawals. And with this strategy that's so simple and so objective, which is the one I use, and with so little time, I've achieved everything I've achieved. Well, if you want to know everything I've achieved and you don't follow me on Instagram, you can find it there. And by the way, the link is down in the description. And there you'll see dozens and dozens, probably even hundreds of withdrawals using this simple strategy of buying when it breaks a low and selling when it breaks a high. I hope you enjoyed this video where I explain and reveal the big lie behind structure, buy yes, and the trends that so many people talk about, but no one really knows what they are doing because almost no one who shares content is actually profitable. There are very few traders who share content and are actually profitable. And that's why I like, from time to time, to reveal and show you that the vast majority of what people teach you is useless. Well, yes, it's only good for wasting your time and losing your money. I hope you enjoyed this video with a bit of humor and a little tough love, which is needed in this industry since there are so many fakes and fools around. And that's it. I hope I've helped you at least a little, and I'll see you in the next video.